Hello traders, Gary Wagner here, 1010 in Honolulu, 410 in New York on Thursday, April the 7th, 2016, and this is the Daily Report for Gold and Silver. Massive rally in the precious metals market, specifically gold. Gold outperforming the rest of the complex, gold trading up about 1.5% on the day. Just off of the highs being 1243, currently trading at 1240.36. The low today, 1222. And as I said, just off of the lows right now, up about $18. As you know, we have been very, very bullish long-term, concerned short-term as to whether or not a bottom was in place. After the move that we have seen today, along with what we have seen forming a base down around those lows at 1206, I can tell you right now it's not a matter of if we're going long, but when, picking the proper spot, because I believe that on this particular rally, as I've said before, this rally should carry us over $1,300 per ounce. So even if we get in at 1345 or 1350, if the market in fact does move back over $13, we've got a great trade under our belts. So timing to me is what is essential. And as I said, it's not a matter of if, it's a matter of when. And let me show you why on our first chart. And this is the chart that I was talking about in terms of pulling up as our first chart. If you recall from yesterday's show, we talked about the fact that the retracement that we saw, in other words, if we are going to construe that the market topped out, this completed our subcount 1 right here, that we were going to go into some sort of a subcount 2. That subcount 2 should kind of unfold, or could, I should say, unfold as some sort of an ABC correction. Now, I believe that we got the A and the B, but our C, as this C came down, to me, that C was fairly conclusive, and that's where we took our first stab, and that's where the market came up, but it also moved back down to create a double bottom here. So what I said yesterday was, my sense was that we are getting some sort of a compression triangle as this last corrective wave, and what we really need to see is the market break above this long-standing, or not long-standing, but this resistance line that we have here that was simply created from the observation of lower highs in the marketplace and higher lows. So traders, based upon this most recent move, and especially today's upside surge, in which we have definitively, as I said, broken above any kind of resistance that we had, we have now really broken above and out of this compression triangle. My sense is we have probably completed our final C wave or final count. We can do this count in a couple of ways, but I do believe that we have probably concluded our correction. And as such, I'm going to label this a C. As I said, there's multiple ways that we can really count this out. Let me show you an alternative count. And this is the alternative count that I spoke about. Irregardless of how we do the count, the most important thing is that my sense is that the long-standing correction is over. The way we would look at it, of course, we have our subcount 1. Our subcount 1 is really divided into a 5 count. 1, 2, 3, 4, and then 5. I also believe at this point that concluded, as I said, subcount 1. Subcount 2 can be divided as a compression triangle. 1, 2, 3, wave 4, wave 5, and then this is our thrust taking us out of this corrective wave 2 and into our subcount 3. Now, how does that look on our bigger picture? And it's really when we look at the bigger picture that you can see the reason for my overall excitement recently. And you know this, we have talked about the fact that I have believed that as we went into this market, in terms of our bottom here, absolutely assured that we hit a conclusive bottom at 1051. That takes us into a wave 1. Our wave 2 takes us to about 1206. We're now going into this wave 3. Now, wave 3 at a minimum will take us, I believe, above 1300. But here's where it gets really exciting. I've created a basic fib extension, and the rule of Elliott wave theory simply states that wave 3 cannot be the shortest of any of the impulse waves. So when we look at the scope and rally that we saw on this wave 1, if we are just going to see wave 3 be a 61% move of what we saw of wave 1, and that would make it the smallest wave, it'd be a truncated third wave, and it really doesn't follow within the guidelines, that would take you to 1356. But for this wave 3 to be equal to wave 1, that would take us to 1,450. Now, that seems to be pretty far-fetched right now as we look at the market $200 below that price point. But traders, had I said that at 1050 that I believe that the market was headed above 1,200, it would have seemed just as far-fetched at that point, the beginning of the year. So I am just simply looking at solid technical evidence based upon Elliott wave theory, which says that wave 3 cannot be the smallest. So if we've correctly identified this wave count and our model stands true, then we should see, as I said before, I wasn't looking for really 1,400, but I do believe with all of my heart that we will absolutely see a move above 1,300 on this next rally. So to that extent, we'll look to get ourselves long either later on today or tomorrow. I would like to position ourselves before the weekend, but as I said at the beginning of the report, traders, it's not a matter of if, but when we're going to get long gold.